Okay, great. Good morning, everyone. Thanks for joining the first of the Thompson Hine weekly investment management coffee chat series. My name is JoAnn Strasser. I'm a partner in the firm and also the head of the investment management practice group. These coffee chats are intended to be concise but practical discussions focused on a variety of developments that impact the financial services industries. Over the course of the coffee chats, we'll be covering pure regulatory topics as well as business-related issues that will be informative and helpful to our clients and friends. Joining me today is my law partner, Cassandra Borchers. She is a partner in the investment management group, and she also leads the firm's blockchain and cryptocurrency initiative. In today's session, we will discuss current cryptocurrency-related investment management products and how they're regulated or not regulated under the securities laws. If you have questions during today's program, we encourage you to join the discussion by using the chat function on your screen. Cassandra will watch for those questions or comments, and we'll try to share those with you. So let's get started then. We get many questions these days about cryptocurrency related products, we can help them launch products. Can their current investment products invest in crypto related investments? And we thought today we'd start by talking about some of a product that is available to not only investment funds, but retail investors, how those are structured and why they're able to function the way they do. That goes a long way to understanding what you might want to do or what you might want to invest in. So the first one I wanted to talk about is a company called Bitwise, Bitwise 10 Crypto Index Fund. So that product is, it just recently started trading over the counter. It was formed actually in 2017. And they started off as an LLC, like a hedge fund, and they converted to a Delaware statutory trust a couple years ago. When they filed their first Form D with the SEC, it indicated that it was a private offering relying on Reg D, that it was exempt from registration as an investment company under 3C1. In other words, it was only for accredited investors and very limited solicitation opportunities. Then in 2018, when they filed a Reg D, they stopped checking the box about 3C1. And that would be consistent with the staff's position, sort of that evolved over time, that cryptocurrencies are not securities. And since they're not securities, Bitwise is not an investment company. So they raised about $160 million since 2017. The Reg D filings indicated 712 investors. And then beginning in December, they began trading over the counter. And the reason they can do that is there's a rule under the 34 Act, that's Rule 15C2. And under that rule, after 12 months, when the securities are sort of seasoned, a broker-dealer can facilitate a market in those securities, provided there's a price. They can determine the price, the value of the security. So that's why Bitwise prices every day. And a broker-dealer applies to FINRA to trade those securities over the counter. And then once that one broker-dealer has authority, other broker-dealers can trade it as well. Grayscale, which is more well-known, it's much bigger. It's been around a little longer. That is a trust that can only invest in Bitcoin. And then they have another product, I think, that does Bitcoin and Ethereum. From a securities law perspective, it's very similar. They raise money from accredited investors, and they do those in Reg D private placements. The last Form D that they filed indicated they had 837 investors, but $5 billion in sales. So once those shares are seasoned, they can trade them OTC, and the institutional or accredited investors can jump back in and purchase more shares directly from the issuer. On the Grayscale, like I said, it's when you set up a grantor trust, you have to decide what you're going to invest in. So you don't have freedom of action to change your strategy. And therefore, like the the product that has 50% Ethereum and 50% Bitcoin, they have to maintain that ratio. So if you have to go to sell securities to pay bills, for example, you sell in that same proportionate share. So much like an index product. The other product, just really very different, but it's interesting to me because it's a way to get exposure to Bitcoin, in a slightly different way. There's a company called MicroStrategy Incorporated, and there are probably other companies that are doing a similar thing. MicroStrategy is described on its website as a business intelligence and software company, but they in August they announced that they would convert all their traditional cash, and they're a cash-rich company, to convert all that to digital coin and Bitcoin tokens and hold it in a digital wallet. And they actually even borrowed money. They borrowed an additional $650 million so they could buy even more Bitcoin. And as of December, they had 70 million Bitcoin, or $1.1 billion in coins. So as the market for Bitcoin went up and down, they've been following that trend. I find that very interesting because on scheduled investments, if that was listed, a board member or an investor might not realize that they are indirectly getting a lot of exposure to Bitcoin through that MicroStrategy fund. Cassandra, I think there are other options for investors that you could cover.
Absolutely. So I'll just note, JoAnn, that in January, the total cryptocurrency market hit an all-time high that exceeded 1 trillion for the first time. So there's definitely no shortage of products out there. Also, as we'll probably touch on a little bit more later, Gary Gensler has been nominated to be the new SEC chairman. And for people who aren't aware of him, he was the former chairman of the CFTC, and has done a lot in the crypto space, understands the market and the various products. So we view that as a positive nominee for the position. But let's first talk about private funds. So there is also a large private fund, there is a large private fund market globally. With respect to private funds, you typically might hear about a crypto hedge fund. But it's important to understand private funds could get access and exposure to cryptocurrencies or other tokens in a variety of different ways or strategies. There are some funds that just track the cryptocurrencies that the SEC has already decided are not securities, and that right now would really just be Bitcoin and Ethereum. There may be an ICO fund that invests in other tokens and related products. There are blockchain funds, and there are funds that do a combination of all of the above. So the structure of the fund and the regulatory requirements for those various types of funds depend upon all of the facts and circumstances. The things that investors may be interested in knowing is whether or not the manager of the fund is required to be registered as an investment advisor with the SEC. It's required to be registered as a commodity pool operator with CFTC, and what those funds are actually investing in. But here in the U.S., there are exemptions. The exemption that relate to these funds, if they do trade in securities, would be the same that you would see for any other hedge funds. That's either 3C1 or 3C7. And along with that, let's talk about derivatives. We'll get a little bit more into this, but if a private fund is investing in Bitcoin futures, then it is probably required to register with the CFTC. If it's investing in Bitcoin directly, they can likely avoid that registration and avoid registration with the SEC as an investment advisor. There's been a lot of activity in this space over the last couple of years as the regulators have wrestled with some of the issues. But we're in a really good position, and I think things are really still moving forward in a positive way. Custody has been an issue for these private funds, and many of them were self-custodying the cryptocurrencies. Now there are a variety of eligible qualified custodians out there that they can go to use a third party, which is I think, a positive development for investors, and certainly something that institutional investors have been looking for. There are processes developing around AML, and how to address that in a digital asset, and all of those come into play with respect to the private funds. As I mentioned, there's the issue of whether or not it's a cryptocurrency, which is not a security, or some sort of other digital asset, token, etc., which would be a security. So currently, the fallback position is if you have a token, you should treat it as a security, and that's usually what we recommend to clients. And then they go down the path of complying with all of the rules and regulations that relate to any other hedge fund that's trading in securities. As I mentioned, Bitcoin futures are also a hot topic, and a hot topic with respect to regulated funds, as we'll discuss in a few minutes. So Bitcoin futures work as any other future would. The contracts are traded on exchange. The CMA does, I believe, the CME definitely provides for, it doesn't have physical settlement, so that works with respect to they do monthly contracts for cash settlement versus physical settlement. So in that regard, we do expect that Bitcoin futures are something that registered funds will be able to invest in, hopefully in the near future.
Cassandra, I'll just come in on that for a minute. I think, on the custody side, the physical settlement, the prospect of physical settlement on the futures is a big concern for the staff. So
it is.
To second your point, the fact that it's cash settled is helpful.
And there are other exchanges. So the CME does the monthly cash settlement, but there's an intercontinental exchange, and at least one other one that offers perhaps daily settlement and physical delivery. It's just a question of what type of product you're looking for and what sort of regulations you need to comply with. JoAnn, did you want to address the SEC staff positions?
Sure. Yeah, I wasn't sure I finished. The next topic we wanted to cover is if you are managing a registered product, a closed-end fund or an open-end fund regulated by the SEC, or maybe you're a board member that supervises that kind of entity, you may or may not be aware of a letter that this Dahlia Blass issued in 2019. She was the head of the Division of Investment Management. That letter was titled Engaging in Fund Innovation and Cryptocurrency Related Holdings. In that letter, she laid out a series of topics that needed to be addressed before funds could invest in cryptocurrency related investments. And now that Dahlia is gone, well, really before she left, there's a staff person named Jennifer McHugh. I would call her sort of the crypto czar at this point. She is the main contact person if a registrant is interested in adding this type of investment to their strategy. So we've been talking to Jennifer a lot lately, up until yesterday afternoon, actually, on a new topic. She's very helpful, but in the sense that she's a good communicator, but the staff is still pretty rigid on their positions, and Cassandra will cover that later. But what's driving their concerns is several topics. One is valuation, and obviously we value every day most funds in our world, and that her questions relate to whether funds could adequately value the crypto related products, given their volatility, the fragmentation and general lack of regulation of the underlying markets, the nascent stage and current trading volume in the futures markets, and would funds have to develop and implement specific policies for those types of products. The other points raised included liquidity, obviously, what steps would a fund investing in cryptos or related products take to ensure that it would have sufficient liquid assets to meet redemptions daily. Cassandra will address current limits soon, Cassandra, we're getting a couple questions. Maybe while I'm chatting, you can check those. How would a fund classify the liquidity, for our 4-bucket liquidity classification reporting requirements for open-end funds? Custody is a big issue. Cassandra mentioned earlier that there are companies like Coinbase that can custody the Bitcoin, but it's still unclear exactly how you custody and whether or not those custody arrangements comply with the 1940 Act. Also on audit, how does the auditor validate the existence of those assets that we say we have custody of? In addition, the staff raised issues related to the arbitrage of the trading, the markets in these currencies, and potential manipulation and other risks. We certainly have seen a lot of maybe market manipulation this week in other contexts, and certainly Bitcoin could and other cryptocurrencies could be just as susceptible to market manipulation. In addition to the staff comments, I just wanted to really briefly mention, some of the tax aspects of these products. On the investor side, if it's a RIC investing, these products generally produce bad income for income testing purposes. So just like if you're investing in gold, for example, or some other futures tied to commodities, you probably are all familiar with investing through a wholly owned subsidiary. That brings limits because a fund can only have one wholly owned subsidiary for purposes of cleansing this income issue. So that means even if the SEC lightens our load here and allows more significant investment in crypto-related product, we'll have to keep an eye on the income test. Another issue is tax reporting when you do invest in something like Bitwise or the Grayscale, for example. Grayscale it does not issue K1s, and I think that's right. If you're not getting a K1, then the company publishes information about the gains and losses, and you have to do your own calculations based on your estimates for how much you own of the fund. Other products do issue K1s, and of course, then as a RIC, you're waiting on your K1, and you need it, and it might not be timely. There is some discussion about Bitwise in particular because it's not a grantor trust. It might maybe be treated as a publicly traded partnership. And if that was true, then that would be good income. So it could be a little easier for funds to invest in that. So still a lot of open questions about the tax side, but pretty clearly, if you're going to invest directly in Bitcoin or even some of the other product using the wholly owned subsidiary would make a lot of sense. Cassandra, I know that the SEC has been pretty vocal on what's allowed and what's not allowed right now, not based on rules, but based on their policies. So maybe you could review that or tee up any questions if you think you want to cover those first.
Unfortunately, I'm not seeing any questions in the chat, so I'll ask Elise to read those off.
Or at least you could text me, I guess.
Yeah, I do have one question that came in. Can you go into more detail in the steps that groups like Bitwise and Grayscale took to go from a Reg D private placement fund to then being able to trade on an exchange with a broker-dealer? He's trying to understand how that path works, difficulty to do so, approximate timing and cost from start to finish.
That's a good question. Tell you what, yeah, I can address that in about a minute, Cassandra, and then maybe you can go through the SEC's current staff position on what you can and can't do. So on the Bitwise, based on my conversation with Jennifer McHugh and also looking at the rules a little bit, if the broker can apply to the CFTC, not the CFTC, to the exchange, and provided the broker can provide the daily mark, then you can trade those securities over the counter under Rule 15C2 to 11. And the and it can be sold to public shareholders. And it's not a particularly complicated process, as I understand it. But you do have to get a broker dealer who's willing to get involved and make a market in the security and provide some volume and liquidity and trading. So I misspoke. It's through FINRA. You apply through FINRA, and I think it's really a matter of scale. You know, if that's why you're seeing the first trading coming out at like 120 million or something for Bitwise, and so what they did is they sold in private placement until they got to some scale, and it took more than a year. And once they got to some scale, all the shares that had been held for 12 months or more were able to be sold over the counter. So my understanding, I haven't done it myself, my understanding it's just working with a broker who is willing to act as the primary market maker, similar to an ETF. And you apply to FINRA and get approval to trade over the counter. And it's like an operating company. And any requirements you have as a company trading OTC, you're subject to the same rules. Cassandra, you want to talk a little bit about
Absolutely. Right. So these are the staff views with respect to registered fund products. With respect to mutual funds and ETFs, there is a legacy position that allows an investment of up to 15% in the Grayscale Bitcoin Trust, that's GBTC. I'll also note Grayscale has some other products. They have an Ethereum Trust, which I think was, they offer intermittently. They just reopened that. And they filed for, I believe, 5 new trusts last week. So they have a variety of products, but it's just the one Grayscale Bitcoin Trust that the staff has permitted. So that 15% investment can be made. You know, this is all subject to change, as I mentioned, with Gary Gensler coming on. We just received word from the staff that they are kind of in a holding pattern, and they aren't going to make any more decisions with respect to Bitcoin or any other cryptocurrencies until permanent leadership is in place. IM leadership feels like they should just wait and you know, see what their new chairman wants to do. We did have a client, which was an interval fund, that successfully revised its registration to invest in Bitcoin futures. Now, the interval fund doesn't have the liquidity concerns that a mutual fund does. In this case, the fund also had an 80% policy in credit, so the exposure was you know, per se limited. But that went through without staff objection. Investing in cryptocurrency funds, however, registered funds and the same interval fund, I believe, was looking to also invest in some cryptocurrency hedge funds, and the staff did not allow that. They did object. And their concern that they expressed was that they felt like the private fund could force the interval fund to take an in-kind redemption, resulting in the interval fund owning Bitcoin directly. Futures in a mutual fund, I alluded to this earlier, they are not currently permitted in a mutual fund, but you know, Bitcoin futures are settled, cash settled on CME. So we don't feel like there's a custody issue. We do believe that the staff understands that. And obviously futures have come a long way since Blass's letter in 2017. However, acting IM leadership is not going to make a change right at this moment. We do hope it's coming down the pipe, however. And so, you know, with respect to, if you have a registered fund that's looking to add any of these products, you know, you should carefully consider what you do pre-filing. We have found it best to just communicate with the staff, and they are very open and being helpful with respect to some of these issues. And you know, right now there is a 15% limitation with respect to Grayscale, but we expect some more to come out this year. Were there any other questions? Oh, sorry, go ahead.
Yeah. saw half of a question come up, which was something about how do you start a Bitcoin fund? What's the best way? Elise, what was the full question?
Let me read that. What is the best path to start a Bitcoin fund where you can market to retail investors, thus avoiding dealing only with accredited investors? Is it possible?
Right. So if you have a Bitcoin only fund and you aren't investing in any securities whatsoever, then I think there is some potential for that. You could do it. You just do a 506C offering, which is the exemption, the private placement exemption, but that does allow for some solicitation. 506B offering would be much more difficult and probably not achieve your goals. I think the thing that you do want to be really cautious about, though, is to confirm that you aren't investing in anything that's a security, because as soon as you do that, you fall under the 40 Act requirements, and then you would either need to do a 3C1 or a 3C7 fund. With respect to a 3C1 fund, you can actually allow up to 35 non-accredited investors, but there are stricter disclosure requirements, which is why people typically steer clear of that approach. But I would say, talk to your attorneys, involves careful planning, and make sure you have not only good legal but excellent accounting. And there are fund administrators out there who will deal with those types of funds as well.
And I'm hopeful that we can find a way perhaps to do an open-end fund, assuming the SEC loosens the reins a little bit, that I'm hopeful that we could do some funds similar to what we did in the managed future space, which was, yes, we're using commodities, futures on commodities, but we're also investing in some securities. So we're registering under the 40 Act and run all the income through a wholly owned subsidiary. Because if you can put 25% in a subsidiary and use futures contracts to gain some exposure to the cryptocurrencies, I think you could probably achieve your investment strategy and still do it in a 40 Act wrapper and be able to sell to the public and have daily liquidity and all the related. Now, the tricky bit, I guess, is the liquidity. So, and all the other issues the SEC raised. So it's not easy to do a 40 Act product in this. And I think Cassandra's probably right. The doing it more as just a private company and then doing the follow-on over-the-counter sales seems to make some sense. And really, maybe it all depends on how welcoming the SEC is going to be to this kind of strategy.
We have one more question that came in.
Okay.
It is, what is the source of the SEC 15% investment limit on Grayscale? They issue public guidance. Is the limit on Bitcoin futures for physical settled or cash settled as well?
It's on both. The limit on 15%, I guess it's twofold. One is for open-end funds, you're limited to no more than 15% illiquid assets, illiquid assets. And I think the staff has just taken the position that this is illiquid. The other reason they've taken the position is for investor protection. This is similar to the staff position before the liquidity rule, where it was per se no more than 15% illiquid. The staff has always had a staff position no more than 15% investing in hedge funds by registered investment companies, and that's because they just think it's a really bad idea for retail investors to be exposed to hedge funds. And similarly, I believe that they're very concerned about the liquidity and potential losses in this asset class. So there's no statutory underpinning other than the concept of no more than 15% illiquid, and then the fact that the SEC staff always has the ability to block a registration if they believe it's not in the best interest of the public, or not allow a registration statement for the same reason. And like many things, some of these staff positions, you really just have to be talking to the staff on a regular basis to ferret out where they're landing. This futures position is a really good example, because 2 weeks ago, I was quite confident that our client would be able to invest in futures on Bitcoin up to the 15% notional limit, and definitely is notional. And they expressed a pretty much agreement with that because they're traded and the volume is pretty decent and we don't have custody issues. So all those things I talked about earlier, we worked through. But for the change in management at the SEC, I think we'd have the okay already. But they're just not going to take a new position pending the confirmation of Gensler. It's just politically, internally not okay for them to do that. So when I heard the voicemail from the SEC staff yesterday, to me, what I was hearing undertone was, yeah, we think you're going to get there, but we just can't do anything right now until Gensler is confirmed or we have a new chair. Okay, I think that wraps up the topic today. Thanks for joining. Cassandra, maybe you could provide a little information about our next chat.
Absolutely. The next coffee chat in the series will be hosted next Wednesday, February the 10th. Our colleagues will be joined by Jason Toussaint, head of exchange traded products for Cryptoin, and they will be discussing more Bitcoin ETPs, and existing alternatives. To register for future coffee chat discussions, you can visit our events page on the Thompson Hine website. Thank you for your interest in attending today's program. When the webinar ends, you will be prompted to take a survey to provide feedback. That's very important to us so that we can keep our content tailored to your interest. So thanks again. Enjoy the rest of your day.
Thank you. Bye.
Thank you.